What's good? This is your boy Rory with Fire Finance Investing, and today we'll be talking about a stock called Ferrari, ticker symbol RACE. Let's join together in our investment journey. Let's find some hidden gems and quality stocks. We would really like if you like, share, subscribe, and comment on the channel though, because we're just getting started. But we wanted to start off with a very strong stock, Ferrari. I first started investing in Ferrari around 2020 during COVID. Everyone was locked in the house. We was uncertain about everything, and we had all this extra money and nowhere to go. I worked the entire time during COVID, so I was an essential worker. I got out there and I did my job every single day. So shout out to the essential workers that kept things from falling apart, and I'm sorry for the people that weren't able to continue working, but I was. But anyway, Ferrari is an Italian luxury sports car manufacturer based in Maranello, Italy, founded in 1939 by Enzo Ferrari. The company built its first car in 1940, adopted its current name in 1945, and began to produce its current line of road cars in 1947. Ferrari became a public company in 1960. From 1963 to 2014, it was a subsidiary of Fiat. It was spun off from Fiat's successor entity, Fiat Chrysler Automobiles, in 2016. I got that from Wikipedia. But yeah, the company is a very old company, and it's a monster. It's a monster stock. This stock, they have so much pricing power and so much clout and so much. They have a lot of the main elements you want in a stock that you own. Here are the 5 finance stock 10-star grade system. We go with the PE ratio, the revenue, the EBITDA, the earnings per share. Do they do share buybacks, shareholder equity, margins, free cash flow, return on investments, and forecasts? We take a look at all these different things in the stock to find out if it has the main elements where we really want to make an investment into this company. And looking at it, we make our decision on, okay, how risky is this? Is it worth it? What is going to be my return? What is the likelihood that I'll make money buying this stock? The forecast is very important. You got to know where your company is going. You can buy a company that's at great value right now, but the company might be at great value because they're going through a lot of different things that can impact the share price. Look at the PE ratio. 54.20. It's elevated, but hey, it's traded historically at a high PE ratio. Look at the chart at the bottom. It's almost at its peak. But every time you try to time this stock, thinking it's dipping and you're going to wait to get a lower price, it just keeps rocketing up because this company has pricing power. They have a list that people have to wait to get on in order to get one of these cars. So they know what their sales are going to look like. They can make adjustments. Look at the revenue. The revenue is growing year after year. That's what you like to see. You don't want to see a company that's moving up and down and all over. That one period where COVID hit was the only time this company took a hit. After that, they just seem to just rocket right back up. That's what you like to see. You like to see a company that's making money. And leadership's very important. Without good leadership, your company will not make much money. You're going to waste a lot of money. And that's not what you want. You want returns. Look at the EBITDA. Again, growing and growing and growing. Year after year after year. Look at that chart. When you're a company that's this strong with your brand, where everyone that buys this product loves it, and everyone that doesn't have one wants one. When you have that kind of pricing power, you're going to make money. Once you keep putting out quality, you're going to make money. And they're doing different things now. They're getting into signing different people. They just signed Lewis Hamilton to a deal to drive their cars. He left Mercedes for them. Earnings per share is healthy. They make money on their shares. A lot of companies are flat for 5, 10, 20 years, or they're declining. This company is clearly on the rise because the demand for their product is so strong. People want these cars so much that they're on waiting lists for years before they can even get their hands on one. You can't just go to the dealership and buy one of these things in a lot of places. You got to reserve. Look at the share buybacks. This company is not diluting you with shares year after year after year after year. They're actually buying back shares, how much money they're making. They're putting their money that they made into their shareholders' hand. And that's what you want to see. You want to see leadership that's focused on building the company and rewarding its shareholders. Because the shareholders are the backbone of the company. If we were to all sell our stock right now, this company would be at zero. They appreciate customers, and it shows in the stock. Look at the shareholder equity. The shareholders make money buying the stock. Look at that. Year after year, it's going up and up and up over time. That's what you want to see. You want to see a company that's actually making you money while they make money. There's a lot of companies, for instance, Snapchat, zero shareholder equity. All leadership seems to do is get the stock and they rip off the shareholders. The shareholders of Snapchat don't make any money at all. So much potential in that company was wasted. Look at the margins. Like I said, their pricing power. Their pricing power is just so strong. It can't be beat. You cannot beat this. COVID put a little dent in their margins for 4 quarters. And right after that, it was back to business as usual. But even then, it barely put a dent in their margins. This company was making money hand over fist during a pandemic and are making money hand over fist during a recession and all this uncertainty. This company has certainty in an uncertain financial landscape. It's crazy. Look at the free cash flow. It's growing. Over time, it's growing. And that's what you want to see. You want to see your free cash flow growing year after year, because as a company, you have to grow or you die. You grow or someone takes your market share. You don't want that. This company maintains its status as a leader in its space. And then it shows by the fundamentals. It shows by the stock price. They're leading. Not many companies have that pricing power as car companies. Look at the returns they make on their investments, on their cash, on their equity. You like to see a company that's making money when they take money out, they take out loans. You want to see that they invested the money well and the money actually made money. You don't want to see companies that lose money time after time after time, and then they're in a hole, and then they're burning cash and not making any. You don't want that. You want stable companies that return on their investments. You want to see that quarter after quarter, year after year, every single year. And this company does. The yearly earnings forecast is December 2024, 7%. December 2025, 9.25%. Literally an annual, year over year, compounded at least 8% projected for the next 2 years. This company is going to be making money. A lot of companies don't even know where their next dollar is going to come from right now. They're worried about having to raise their prices. Look at the price. It's not even at its 52-week high right now. It's almost there. But a lot of times with these kinds of stocks, it's difficult to time it. So you may as well just start a position. Would I right now? No, because I already have one. If I had a lot of money, I would nibble some though. I would buy the dips here and there. But this isn't financial advice. All I'm saying right now is that the stock is nice as hell. This stock is locked and loaded. And I think it's going to be very defensive. during these tough times. And if it dips, if there's a market crash or something, I am buying more of this stock because I know that the rich get richer, the more the poor get poor. So this is where a lot of the money is going to be going. A lot of people are still going to be buying these cars regardless of what the financial forecast for the entire world or country looks like. You're going to be buying this stock because it's a well-run company. Their margins are awesome. They make money. Their earnings go up every year. What's not to like? But anyway, like, share, subscribe, and comment, guys. Let me know what you think about the content. We're just getting started, but we'll get better. Thank you for coming by.